Hello, everybody. Hello. Hope you all are doing well today. Uh, we are going to get started in a minute. I'm going to just live stream us to Facebook, and that way people can see us there as well. Hello, everybody. Hello. Welcome to today's session of Show Me the Money. So, if you were here last time, because I see a couple of people who were here last time, it's going to be a lot of the same information. However, you may hear it differently as well because you are in a different part of your journey, different walk of, life and things like that. So, um, I was also trying to live stream. Did that not work? Let's see here. Think that that's going to work now. All right. And we are on Facebook and we're going to get started. Um, I'm Cheree. I'm the money lady. Welcome to today's session of Show Me the Money. Today's session is all about how you can build a portfolio with real estate and how you can actually get the money to fund your deals. Now, this is from a lending point of view. I know that some of you do creative financing and things like that, even though I know a little bit about creative financing. I do a lot of referring you to other people who can actually assist you with the mechanics of doing some of the creative deals that's out there. So, but today's session is going to be from a lending point of view. So I'm going to share my screen here and just make sure I can see everybody. And we're going to get started. Also, if you have questions today, you can feel free to put them in the chat, and I will be sure to acknowledge them as you are putting your questions in there. So, agenda for today, we're going to talk about a couple of things. We're going to play a little myth versus fact or true or false game. We're going to talk about the loans that are available for investment properties. We're going to talk about some low down payment options for you because so many people ask all the time, Cheree, how can I get a lower down payment for the investment properties that I'm going to purchase. And then we will also have time for a little bit of Q&A as well. So, um, who am I? I am a lender. I specialize in investor loans. I am licensed. I am a licensed loan originator. So if you are looking for a primary home loan, I'm able to assist you with those as well. But I have a love and an affinity for our investors out there and actually helping you build a portfolio. On the left-hand side, you can see my two German Shepherds there. So I live in a little small town in Maryland called Havre de Grace, and those are, we call them the King and the Prince, but their names are actually Jackson Dallas. So you get to see them there as well. Okay, I'm going to start off with the little bit of true or false, myth or facts. You can put your answers into the system here with regards, or into the chat here with regards to what you think. So, the first question. You need to have 20% down payment in order to invest in real estate. Again, if you can put that in the chat for me, it's just a little bit of true or false here. What do you think? Do you need to actually have 20% down in order to invest in real estate? I should have some Jeopardy music here. You do not. Yes, thank you so much for answering. No, you don't. There are different ways for you to be able to invest in real estate where you do not have to put down 20%. So, we're going to discuss later on some low down payment options, but just a little bit of a preview for you. You are able to purchase the house as a primary residence, and you can purchase up to 4 units, rent out the other three, and you live in one. You are also able to purchase a house that's a fixer-upper, turn it from a 1 unit into a 2 unit, rent out the basement. That's house hacking. Also, for some of the purely investment properties, we have lenders now that will go down to 15% down payment. And for the fix and flips, we will even, it's sometimes, depending on where the property is located in your experience and things like that, fix and flips I've seen as low as 10% down. So, yes, there are other lower down payment options for you. All right, true or false, myth or fact, the best first investment property is a rental. What's the best first investment property? Is it a rental? True or false? If you all again want to put something in the chat, let me know what you think. True or false? The best first investment property is a rental. If you said false, you are right. It's false. It depends. Yes, thank you so much, Tim. It depends on your situation. It depends on your interest. It depends on what you need right now. So, for example, I will have people who contact me who say, I don't have any money. I don't have any cash at all. Well, if that is the case, then the best investment, first investment for you may be for you to do some wholesaling and for you to get some cash. It could be for you to do a fix and flip. Again, for you to get some cash. If you don't own your own home at all, maybe the first investment should be that you want to buy your own home and do some house hacking. All perfectly good, reasonable options. I'm just trying to, again, get you to think outside of like, hey, for me to invest, I have to have a rental, because that's not the case. It could be other things that you are participating in. All right, true or false? Myth or facts? True or false? If the deal makes money, I will definitely qualify for a loan. Just the deal making money by itself means I'll definitely qualify for a loan. True or false? If you answered false, you are right. Just because the deal makes money does not mean you'll qualify for a loan. One of the questions, how much money is it making, right? How much of a spread is there? Also, more importantly, is what's your credit? What's your experience? Does the deal that you're doing require experience? I'll give you one example of that. There are some people who are coming to us now wanting to do ground up construction. And if you don't have any experience doing any, they call them more extensive renovations. They'll call them like hard renovations, right? But where you're doing a full gut job. If you don't have any of that, and sometimes the lenders will also want you to have ground up construction experience before they'll give you money for it. Now, we do have a lender that does not require any experience, but just because your deal makes money doesn't necessarily mean you'll qualify for the loan. So sometimes it is that you don't have enough reserves. Sometimes you don't have enough cash. Oftentimes, when I'm talking to people, it's the credit. Or I had another issue with another client where none of the people that owned that property was going to be a 25% or more owner in that property. So we had a guarantor issue. So, you know, just some things to think about. All right, true or false? True or false? If I get pre-approved for this investor loan, I'm good to go. If I get pre-approved, I'll basically, when I put an offer in on the property, I'll basically close. True or false? Again, if you answered false, you are right. This is not a true statement. Just because you get pre-approved, especially for an investment property, does not mean that you will get approved for the loan. Because for investment properties, there are more, a lot of additional factors that go into getting approved for an investment property versus you getting approved for a home that you're going to live in. So, for example, let's say that you're buying a rental and you want something called a DSCR loan. DSCR loans basically mean, can the rental income pay for the mortgage? If the rental income can pay for the mortgage and you have a decent enough credit score and you have the money for down payment and closing costs, you're practically approved, right? Well, let's say you put an offer in on a property and the appraisal comes in where the monthly rental income does not pay for the mortgage. And you don't have a high enough credit score where the bank will grant you an exception. Well, then you may not get the approval. You may not get the approval. So, when we're looking at you buying real estate for investment purposes, we look at you as the individual, and then we also look at the property itself, and both of those things have to be approved. Okay? I think this is the last one here. True or false? Myth or fact? All lenders are the same. All I have to do is find the lowest rate. All lenders are the same. If I can just find the lowest rate, that's all that counts. If you answered false, you are correct because all lenders are not the same. It's not just about finding the lowest rate. It is number one, we don't as lenders just charge you a rate, especially for investment properties. We also usually charge lender fees and something called points. So you may get a lender that offers you a slightly lower interest rate, but they are increasing the amount of money that they're charging you for your lender fees and your points, right? And then beyond that is, can that lender actually close the loan? Especially when you start speaking to people who have experience buying lots of properties. What they have discovered is that sometimes you'll have a lender who says to you, or a mortgage broker like me, who will say to you, yes, we can absolutely close this loan. We can absolutely do it. And then 2 to 3 days before you're supposed to go to closing, oops, sorry, we can't close this loan, right? So, the number one thing you're looking for is, can that lender actually close that loan? That mortgage broker that is bringing you to this specific lender with the money, do they have any experience working with that specific lending company? Do they know that that specific lending company actually closes loans? So, alrighty then. So, when you're thinking about buying real estate, I oftentimes think, like, what do you want your portfolio to be? What does your portfolio need? What do you want your portfolio to be? And there are four things that your portfolio usually needs. I'll just say always, just, I hate to use that term because invariably, sometimes you need one of these more than the other, right? So you'll go through phases of your portfolio building experience. But your portfolio, you're usually looking for cash, right? You're usually looking for active money coming in from you having that real estate portfolio. You also are looking for cash flow, right? So our rental properties give us cash flow, our fix and flips give us cash. Some of you want to be private lenders, for example. Well, that gives you cash because you're making interest on the money that you are loaning out. So you want to have cash, you want to have cash flow, you want to have appreciation. Some markets have appreciation, some markets don't. There are markets in the Midwest, for example, where the houses were $50,000 in 2000. The houses were $50,000 in 2008. The houses were $50,000 in 2022, and the houses are still $50,000. There's very little appreciation, right? But some of you are looking for, like, no, I want to grow my equity position. Well, then you're looking for appreciation, right? And then some of you are looking for savings. You have um, a high amount of income, especially from a high income earners, and you're looking for ways in order to get some tax savings through depreciation, through cost segregation, things like that. So, we as lenders also understand that during different seasons of your real estate investing journey, you'll be leaning heavily on one or two of these a lot more than the others. And part of our goal is to help you actually achieve all of these things within your journey. So, let's talk about the different kinds of loans there are for investment properties. We're going to talk today a little bit about house hacking, a little bit about low down payment options, fix and flips, the Burr method, rental properties, and ground up construction. I do want to say, if you have a question, please feel free to put it into the chat because I am monitoring the chat. Um, if you want to take yourself off mute as well, if you have questions as we go through these, feel free to do that as well. So this is an opportunity for you to get your questions answered with regards to the different funding options that are available to you. So, one of the ways that a lot of people get into their first properties and get into their first investments, especially with the rates being as high as they are, the housing prices being as high as they are, house hacking is a great way that people do that. So, minimum credit score that you need is 580. I always say if you have above a 640, you have more options. If you have, above a 740 credit score, you'll get better terms. So, just thinking about that, excuse me, just thinking about that, the better credit that you have and the lower debt that you have in relationship to your income, the better your terms are going to be. So, you can get in the house hacking method with as little as a 0% down payment. If you are part of our military, you have any kind of VA benefits, a VA loan could be a great way for you to go. You could also get a USDA loan at 0% down payment. And the interesting thing about USDA loans is they're not just meant for rural areas. You can also get them in certain suburbs as well. So you may ask, well, why don't more people get USDA loans? There are some stricter guidelines with regards to the debt to income ratio. So, just recognizing that. So one of my goals, one of the things I do is match you with the best loan option for you. Um, if you're a first-time home buyer, conventional loans are 3% down, lowest amount 3% down. And then the FHA loans are 3.5% down. We also have down payment assistance programs available for you. And again, you can even buy a property that's a fixer-upper. Let's say it's a one unit. You can get something called the home style renovation loan where you're able to rehab the property. You can even turn that property into a two-unit, live in one unit, and rent out the other unit. So, Tim, your hand is up.
Yeah, two different questions.
Sure.
The first time homeowner. homeowner or home buyer thing for 3%. Does that literally mean it's your first time buying the first house you're living in? And like, or if you have any other mortgages that like, then you're not eligible for it.
Yeah, so it's if you have not owned a home in the past 3 years or been on any title for any homes in the past 3 years, you're considered a first-time home buyer. Um,
So,
There's
but like,
also for that 3%, one more thing. There's also for that 3%, if you are below 80% income, area median income, even if you're buying your second or third home, you usually can get the 3% down as well. So,
I
um,
guess
go ahead.
so. I mean, so the hypothetical, if you've never had a home, but like someone dies and passes you an investment property, right? So then like now you own that investment property, but like you are living in an apartment or something and you decide that you want to buy your first home, are you able to go and do that 3% first time buyer thing, even though you have a mortgage and a deed or something that
Yeah,
was given to you?
technically, no, you're not able to because you already technically own a home, even though you inherited it. So,
Okay.
but if you make, less than 80% of the area median income, then, maybe we can get you in that way. Otherwise, you're still able to buy the house. You just buy it either with an FHA loan at 3.5% down, or you can buy it for 5% down with a conventional loan, you know. So there
O-
could be some other options for you.
Okay. So that was one question. And the second question was, are there any sort of limits for the VA loan and house hacking? Because I actually met with someone recently and they were talking had used the VA loan and said that they weren't able to do house hacking or something right off the bat. And I didn't really want to argue the point with them because I didn't think it sounded correct. But
Mhm.
so since you brought it up, I figured I'd ask.
Sure. So, um, I'm going to take a step back and say overall with house hacking, what happens is we are not able to count any of the expected rental income as part of income that you would have within your debt to income ratio. So if I had a veteran who came to me and said, Cheree, I'm going to house hack, I would say, great, that's good to know between you and I. However, we're not going to, uh, it's not that you're deceiving the underwriter, but we don't have to tell the underwriter that you intend to house hack,
Well,
right?
yeah, so I guess so. So the hypothetical is if you buy a two unit and you're going to live in
Mhm.
one side, as long as you've got the income and whatever else to
Yes,
cover your entire mortgage, like
that's where I was headed.
you can house
Yes.
hack to your heart's content.
Yes, so
Okay.
that was actually where I was headed.
Yeah,
So
okay.
if the rules are with conventional VA, any of these loans, if you buy a 1 or 2 unit property, you have to be able to afford the entire mortgage on your own. Once you get to 3 or 4 units, then they count 75% of the rental income that's expected. They count that towards your income. But, house hacking, usually when people buy a single family house, they'll say, oh, sure, I'm going to rent out some of the rooms, right? I'm going to rent out one of the rooms to my sister, my friend, whomever. I'm going to house hack. And it's like, great, you can do that. And the underwriter doesn't need to know that.
Got it. Thank you.
Yep. And Elizabeth's asking if the session is being recorded. Yes, it is being recorded, Elizabeth. So, does anybody else have any other questions about house hacking? Okay, if you have questions, you can just raise your hand like Tim did or put it into the chat. So, okay. Another low down payment strategy for people with regards to building a real estate portfolio, right? Because that's where we ultimately, if that's what you want to do, where we ultimately want you to be able to be successful, is you are able to buy your first home. Let's say you're going to use a conventional loan, right? You buy for your first home for 3% down. You live there for 12 months, minimum 12 months. And then you move to a new home. You're going to put 5% down on that new home and you're going to rent your current home or previous home out, right? And then 12 months later, you're able to move to a new home and you would have those first two homes rented out. And you can move into the new home for again for another 5% down. Now, those are the rules. What typically happens is people have 24 to 36 months of living in home number one before they move to home number two, home number three, etc. But this is a way for that people, have used a low down payment strategy in order to build their portfolio. I did have another client as well. He used to live in Maryland and he had a virtual job, right? So he lived in Maryland and he decided that he wanted to move to a place in Virginia. And we did that same thing where he bought his home in Virginia for 5% down and he rented out his home in Maryland. And we were able to count 75% of the expected income from that Maryland house. We were able to include that in his as part of his income for his debt to income ratio. So, again, just giving you some ideas of how you can build your portfolio. I just want to show this as well because this is a loan estimate. And when you're comparing lenders, oftentimes I will have people come to me and say, "Hey, Cheree, can you give me an estimate for this? I'm comparing your cost to another lender's cost." Which is great, right? I definitely want you to feel like you are getting the best deal for you. I do also want to let you know that when we are looking at what your closing costs are going to be, there are things, most of the things are outside of my control as your lender. So that's your appraisal, what your appraisal is going to cost, what the title fees are going to cost, what the taxes are going to cost, what the escrow is. Escrow is a fancy term for savings account that you're opening up for your insurance and your taxes, right? Um, and basically, every month you're going to pay into your mortgage with a payment to your that part of your mortgage payment every month goes to insurance and taxes, right? So we don't have any control over those things. The only thing that we have control over is this blue area here that is highlighted. Those are your loan costs, and those are specifically your lender fees and any points that's being charged to you. So, I just want to encourage you as well to just, if you decide to compare lenders, number one thing you want to make sure is you're dealing with two lenders who can actually close your loan, right? And then number two is based on that, how much um, are the two lenders actually charging you? The third thing is, at least for our company, if you get another loan estimate from another company, you bring it to us, we will do our best to match it. Especially if you are buying a primary home, I have a lot more flexibility with being able to match that other lender. So, just wanted to give you that information as well so that you are prepared. Okay, now let's move into pure investment properties. You're buying a shack. Hopefully, your first fix and flip is not a total shack, right? I always suggest for people fix and flips, you always want to start off with carpet, paint, simple stuff, right? Okay, how do we actually quote your fix and flip loan when you find a property? We're going to tell you four primary things. We're going to tell you what the down payment is. We're going to tell you what points you're going to pay. Points are basically your lender fees. 1 point is 1% of the loan amount. So, in other words, if you are borrowing $100,000, 1 point is $1,000. So we would say you're going to pay 1 point, meaning that you're going to pay $1,000. The third thing is length of time. How long are you getting this loan for? Are you getting it for 6 months? Are you getting it for 12 months? We even these days have some 15-month loans for people who want to buy short-term rentals in rural areas. And I'll go into that a little bit later about why we're doing those. And then the fourth thing is how quickly we can close, right? So, if you have some flexibility with closing, meaning you can close in 30 days, then you're probably going to pay less down payment and fewer points. If you need to close in 5 days, which the shortest time I've closed a loan like this is 2 days, but I knew the borrower and the person that had the money, it was just a simple like, hey, we're gonna do this. Um, but I will tell you this, if you need to close in 5 days, you're probably going to pay more either in down payment or points or more because you're dealing with hard money unless you have a relationship with a private lender already. So we have a question here. What about a bridge loan if your funding is short? Um, There are ways to get bridge loans. Usually for these, I ask people to have a money partner for something like this. So you would be able to get a bridge loan from somebody else who would be a money partner. And they may say, for example, uh, you can pay me back, you can pay me interest on a monthly basis. Sometimes they would say you can pay me back when you close, like when you sell the house, right? And we've seen people charge money on the back end, right? So they'll say you don't have to uh, you don't have to pay us any points up front, but on the back end, when you sell this house, you're going to owe us 4 or 5 points, right? So bridge loans, I've typically seen that. I've typically seen people go and get money partners. And Delonta, I know you're in the room usually for grid. You weren't there last night, which, definitely understand that. But building those relationships now so that when you need a money partner, you're able to say, hey, I've got this great fix and flip opportunity. I need I don't know, $20,000 in order to secure the rest of the funding that's needed. And depending on the deal, people will give you the money. Depending on the deal and depending on you, I should say that. So, just a quick example here for people. So, let's say you're buying a property for 70,000, you're renovating it for 10,000, so your $80,000 is your cost. The after renovation value or ARV is 100,000. As the lender, I may say, great, you pay 20% of that total cost. We'll pay 80% of that total cost, and we'll give you a 12% rate, interest only, 3 points. We can close in 5 days, and you've got 6 months in order to buy this property, fix it up, put it back on the market, sell it, give us our money back. And there are no prepayment penalties, right? So sometimes there are lenders who will say, we want you to have this loan now for a minimum of 3 months. I've done a couple of deals like that. So, just something, the terms may be a little bit different for you, but these are just examples of ways that people will actually give you a quote for a fix and flip loan. So, let's say you want to BRRRR though. You don't want to sell this property. You want to ultimately fix it and rent it, and then refinance it. I will say right now, BRRRR stands for buy, renovate, rent, refinance, and repeat. For the refinance piece, because the rates are higher, I have discovered people are having trouble refinancing and getting all of their money out of that renovation. Usually, the people that I am helping do BRRRRs for the refinance piece, I just try to set it up so they don't have to bring any additional money to the property. If you are working with another lender, and you're asking them for a BRRRR, you're doing a BRRRR strategy, make sure they're just not quoting you the fix and flip piece of it, the buy and renovate loan, right? Make sure they're also telling you, hey, when you refinance, you're going to be able to refinance for X number of dollars, and you're either going to get a certain number of money, a certain amount of money, sorry, back, or you're going to have to pay a certain amount of money at the closing table. Okay. So that way you can know like what that entire process and cash outflow is going to look like. Okay. Minimum 660 credit score for my BRRRRs. And I will tell you this right now. I have had people, so I have one lender that will go down as low as 600 for buying and renovating. However, if you do not have a 660 credit score or higher, it is harder to refinance. So I did have one person who ended up having to sell a property because he had closer to a 600 credit score and he couldn't find anybody to refinance that property within the BRRRR. And he wasn't able to find a credit partner for whatever reason. That was the last that I had spoken with him. So just kind of make sure that you are, if you want to do the BRRRR, that you are in a position to be able to do the entire thing. Okay? Again, if you have questions, put them in the chat. Let me know. Raise your hand if you need to, so that way I can answer your questions. All right, let's talk about the fix and rent example. We're going to take that same house that is 70,000 to buy, 10,000 to renovate, 100,000 ARV. You're going to get two different loans. The first loan is for you to buy and renovate that property. Let's say it's a 10% down payment on that $80,000. So that total loan amount is $72,000. Then you're going to buy the property, you're going to renovate it, and you're going to rent it out, and you're ready to refi it. The refinancing is going to be based on the after renovation value of the property, which is 100,000, and it's also based on can the rental income pay the mortgage? And again, your mortgage includes your principal, interest, taxes, insurance, and any HOA or condo fees. But I wanted to show you this example just so you can see how the real numbers are going to work. So when you get ready to refinance this property, your original loan amount was 72,000, but when you refinance that property, you're only going to be able to get a $70,000 loan, right? Sometimes they go up to a 75% ARV. So this is where I say you want to, when you're dealing with your lender, have them price both of these things out. But let's say you're in a situation where you can only get $70,000 as your new loan amount. That means you would need to bring $2,000 to the closing table. That's the difference between the loan amount, the 72,000 that you did for your fix and flip loan, and then this new loan that you're getting. So you need 2,000 plus additional closing costs for this new loan. So I've been in situations where I'm like, in order for you to refinance this property, you're gonna have to bring 20 grand, 25 grand. One of them was $80,000 to the closing table. Um, I don't know if those two gentlemen have ever gotten a loan. They did a deal in DC and the numbers just weren't working because of the ARV of that property and their credit score and things like that. They were capped at a certain amount of money that they could refi out. So just something to think about. So I've beaten this like a beaten this dead horse. Make sure you can refinance with little to no cash out of your pocket, unless you're okay with bringing more cash to the table during the refi. Just, know in advance. DSCR loans. DSCR is a fancy term, but simple concept. The acronym stands for debt service coverage ratio. It's used for rental properties, whether you're buying long-term rental, short-term rental, midterm rental, right? It basically means the rental income has to pay for the mortgage. If the rental income pays for the mortgage, I have here a 600 credit score, 660 or more credit will give you better terms. I will tell you that because you'll have more lenders that will loan on the property. Uh, you'll also put down anywhere from 15% to 35%. What's the difference? If the property is in a city or a suburb, you'll put down 15 to 20%. If the property is in a rural area, you'll put down 25 to 35%. I only have two lenders that will give you a 15% down payment rental property loan. And because I only have two lenders that will give you 15% down, your interest rate is going to be higher. Your interest rate is going to be higher for 15% down. Uh, the person is on here. I said this last month that, or 2 weeks ago, that we locked him in for a DSCR loan, 6.99%. But he's putting down 20%, right? So if you put down 20%, I have a lot more lenders I can go to. And because I have a lot more lenders I can go to, they are much more competitive with regards to rate. Okay. So that is just something to keep in mind with regards to the DSCR loans. A couple of questions here. What is your typical organization fee for a refi from an interest only to a DSCR loan? So for the fix and flip portion or the 6 month loan that you're getting, typically it's about 3 points that we're charging for that loan. Then when you move into a DSCR loan, it varies. It could be anywhere from 1.5 points to 2.5 points is where we are for that. So uh, another person saying 15% down, interest rate is higher, and the points cost are as well. Correct. That is correct. Interest point, I've seen with the 15% down payment that the interest rates were in the eights. So just to give you some perspective. Whereas if the person put 20% down, the interest rate would have been 7.25, like that kind of difference. So, but I've had some people who are like, Cheree, I have to be at 15% down. And then you're also able to refinance as well. The supermajority of these DSCR loans have prepayment penalties, so you'll want to watch out for that as well. So you may be in a position where, because of where you're buying and, things like that, you are willing to put the 15% down, have a higher interest rate, and know in 2 years you'll be able to refinance and, reduce your monthly mortgage payments at that point. So. Another question, do you require a 5 year holding term for the DSCR? No, we do not. We do not. So you will have prepayment penalties for the DSCRs, but usually the DSCR prepayment penalties that we give, and it depends on what state the property is in because some states do not allow prepayment penalties. And don't ask me which ones because I can't remember, but I have a list if you need one. Um, but usually the prepayment penalties are 3% of the loan amount for the first year, 2% for the second year, and 1% for the third year. So if you have a loan amount that's $200,000, in year three, there'll be a certain interest rate where you're like, I'll just pay the $2,000 and get out of this loan and get into a 5% rate. Let's say it goes down to 5%, a 5% rate for this rental property because it'll be worth it for you to pay that 1% prepayment penalty, for example, in year three. So, another question, are there minimum maximum loan amounts for DSCR? The minimums always fluctuate, but I think right now they're 75,000. They always fluctuate between 75,000 and 100,000. Um, and then max loan amounts, I think is 3 million. I think so. 3 million for the DSCR max. So, great questions. Okay, some of you want to do ground up construction. Those are possible. You do have to have good credit though to do ground up construction, 700 credit score, usually 20% down. The term is going to be up to 18 months. I do have a lender where you being a newbie for ground up construction is okay. Most lenders want you to have two ground up construction projects under your belt, but I do have one place where you can be a newbie. I will tell you this, if you have no experience doing a fix and flip, I would not suggest you start up with ground up construction unless you are going to do ground up construction for a home that you're going to live in and basically build it out as a two unit, right? Where you can do house hacking and somebody can live downstairs and you and your family can live upstairs or vice versa. I do not suggest ground up construction for complete newbies buying an investment property. The rate and the terms are going to suck. And that's a technical term. And the amount of reserves you're going to have is going to be extremely high. But if you're able to do a couple of regular fix and flips and then you do a couple of full gut renovations and then you get into ground up construction, you're going to have a track record at that point and it's going to be better for you. All right. I'm the money lady, so you can call or text that number. You can also go to that website in order to get all my contact information. But if you're here, you most likely already have my contact information and you are already like a part of our community. So, with that, I will let you ask any final questions. You can either take yourself off mute to ask questions or you can put them in the chat. And while we're doing that, I'm also going to check Facebook because I have, um, we're on Facebook Live, but I haven't been looking at questions there. And it looks like I don't have any questions in Facebook. So, any other questions? Okay, everybody. Well, thank you so much for being here today. Really appreciate all of you. Um, I do also want to invite you to our GRID real estate investment groups. There are 40 communities across the country. And if you go to gridinvestor.com, I'll actually put it in here. If you're not already a part of GRID, it is a completely free networking community where you can go and network with people, build relationships, things like that. I cannot recommend Grid enough. Completely free. Nobody gets up in the front of, the room and sells you anything. It's education and community and relationships. So if you wanted to come and attend any of those meetings, I highly suggest it. And other than that, that is it. Thanks so much for being here today. And we run these twice a month. So if you want to invite family, friends, coworkers to come hear this information, I'd love to have them as well. Take care, everybody. Bye.
Thank you, Cheree. Appreciate it as always.